going to be looking at output VAT and input VAT. You'll remember last week we spoke about VAT. Oh, not last week, I'm sorry. It's about 2 weeks now. Sorry, I didn't post anything last week. So in today's video, we're going to be looking at output VAT. So it's important that you look at our previous video, and because that's going to form a very good basic understanding of what are we talking about here. So if you haven't watched our previous video about VAT, please do so, because this video is a build up from there. So today we're going to be looking at output VAT and input VAT. So what is an output VAT? So an output VAT is basically VAT that is levied on your taxable supplies, or on the taxable supplies of goods or services by the vendor. So let's say, for instance, you're a company, you supply, okay, in this example, let's say you're a company, you are selling cars, right? So every time when you sell a car, you have to pay VAT on it. But remember, not everyone is required to pay VAT. That's why I'm saying you need to go back to our previous video and see what's a requirement for people who needs to be registered for VAT and pay VAT. So I'm just going to be continuing now. So let's say, for instance, we're a company. In this case, the company is selling cars. One of their cars they sold, it was for 100,000 excluding VAT. So on top of that 100,000, you need to top up and add 15,000, and then you need to sell your car for 115,000. 15,000 needs to go to SARS. It's an amount of VAT that you need to pay, and that amount is called output VAT. All right, it's an output, it's going out. It's an output, it's going out. Just remember that. And remember that it's also, if you look at my definition here, it says it's VAT levied on the taxable supplies of goods or service. So sometimes you might not necessarily be selling goods like cars, like whatever, store, furniture, you're not selling furniture or hardware. Sometimes maybe your company is providing services. So an example of those is maybe like a law firm, for instance. Law firm, they don't have a physical thing that they are selling. They just provide services. Maybe you have a problem, you need a dispute that you need to resolve. You'll go to a law firm and then they'll do all the things, they'll represent you in court. But there's nothing physical that they sell, like a car, like a furniture, like whatever, hardware. So, but you regardless of what service you provide, you still need to pay VAT. As long as you fall within the requirements of VAT, you still need to pay VAT. And another good example of the companies that are providing services, it's accounting firms, KPMG, your Deloitte & Touch, your PwC, all these other audit firms that you guys know, they are required also to pay VAT. So for whatever sale that they make, then there's a portion of VAT that they need to then go and pay it over to SARS. Remember, we spoke about the tax rates as well, 15%, some of the rates is 0%. So yeah, so that's output for you. Then I'm gonna move on to the next one, input. Now, an input VAT is an amount of tax that you are required, no, sorry, not required, you are allowed to claim back from SARS on your purchases. Just note the difference. Remember the output you are paying out. When you make a sale, whatever sale that you are making, there's going to be VAT that you need to pay it over to SARS. But an input, it's money coming in, so it's a good thing. So with VAT, you are not always paying. So some of the stuff you can claim back. So let's say, for instance, you're a company, you're a hardware company, you're selling whatever. Let's say doors, furniture, wall kitchen units, and whatever. So whatever that you paid to acquire your stock, you're going to claim VAT from those amounts. Let me just make you an example with the car here. Let's say, for instance, your company, you are selling cars, right? But you are not the manufacturer of cars, of which most dealerships are not. So let's say this dealership of yours is buying cars from private individual. Let's say someone has driven his car for 3 years and it doesn't want it, and then they come and then they sell it to you. That's not a good example. I'll tell you what, because let's say you're an individual, I can't claim VAT if I buy from an individual. Let's say I buy a car from another dealership. Let's say my dealership buys cars from another dealership and then I resell the cars. So If I go and then I go to another dealership, the dealership has to also be registered for VAT for me to be able to claim. Because when I go buy, remember when I go buy a car, I'll buy a car from that dealership, including VAT. So in other words, I'll buy it for full 115,000, right? But of that amount, then they will tell you that, okay, the VAT portion there is 15,000. Then it means 15,000, I can claim it back from SARS. That's an input VAT. It's basically on all your purchases, not all. Some of them are not exempt, some of them are zero rated, but your input comes from your purchases that are allowed, that you are allowed to claim VAT on it. I hope it's clear. Output is when you are paying out, input is when VAT is coming in. All right. I hope you guys are following. If you're not following, please let me know. Just drop a comment and then ask a question, and then I'll explain it to you because this is very important. Now, let's look at different scenarios and then you will basically tell me whether it's an input or an output and how much is the VAT amount on it. So in this case, on all the scenarios that we're going to be looking at, VAT is, I mean, the amount that I'll be giving you, they are inclusive of VAT. So for instance, in this case, the 10,000 is including VAT. So let's look at the scenario. It says Alpha Traders bought trading stock worth 10,000 Rand from Builders Warehouse. So they bought trading stock. So what I really need to know from you is this an amount, is this an output VAT or an input VAT? And how much is the VAT amount? They bought trading stock. Remember we said your input is when you buy. So you go and then you bought from Builders Warehouse, so you bought something, then you will be able to claim. So this is an input VAT. And then how much is the VAT amount? Because the VAT is already included in the 10,000. Because when you go to any shop, the amount that you are going to pay is an amount including VAT. So even in this 10,000, the VAT portion is already included. So the calculation is different. For you to get a tax amount, I mean the VAT amount, you will take your amount including VAT, of which is 10,000 in this case, you times it by 15, divide it by 115, and then you're going to get your VAT portion. So in other words, you bought stuff for 10,000 Rand, you will be able to claim 1,300 from SARS, right? Number two, Pick n Pay contracted the security services from Sigma Security and paid 150,000 for the month of August. Again, here, is it an input or output? And how much is the VAT amount? Pick n Pay, they what? They paid. So it means they have to claim back. So it's an input. Pick n Pay will be claiming an input here. Again, you will take your 150,000, times it by 15, and divide it by 115. So again, like I said earlier, that it does not necessarily have to be a physical thing that you bought. In this case, it was security services. The guys are standing there by the gate or by the door and then looking after the shop. So in this case, how is this different from the previous one is that here it was physical stock. It was physical stock that you can see. But here, they bought a service from Sigma Securities, right? It's still an input. These scenarios are different and you have to understand them and see the differences in between them. Okay, so we've agreed that this is an input VAT and the VAT amount is 19,000. So Pick n Pay, every time when they go and pay for that 150, they'll be getting about close to 20,000 from SARS for buying the security service from Sigma Security. Let's look at another scenario. ATA software company sold its artificial intelligent AI software for 1.5 million to Meta Group. So here, again, so it means ATA is an IT company, right? So they went and then they developed this AI solution software. Now they are selling it to Meta Group. So now, remember here, they're not buying it. ATA is selling it, so it's an output. They have to pay VAT to SARS. So if you look here, excuse me, so is this an output? Okay, that's a standard question. So if you look, it's an output VAT because now you are paying out. It's your sale, basically. It's on your sales. So you pay you sold your software for 1.5. Again, to work out your VAT is 15 times 115. Then you get your VAT amount. In other words, ATA company needs to pay 195,000 to SARS for their sale of 1.5 million. It looks like a lot of money. It is a lot of money. Companies pay a lot of money on tax. And this is just one of the taxes that you pay. So there's a whole lot of other taxes that you pay as a company. But we're going to get to that. But as it is, every time when you sell, remember, you're going to pay your output. Let's look at scenario 4, KPN, not MGs this time. KPNG auditors, they issued an invoice of 80,000 to their client ABC Traders for the auditing services provided. So is this an output or an input VAT? For KPMG, it's an output VAT because they are selling, they issued an invoice, so it's an output. So in other words, KPNG will have to pay 10,000 to SARS for that 80,000 that they issued to their client, ABC Traders. It's an output. So in this case, also you must just note that it's a service. There is no physical thing that they sold. They just provided their services. Here it was an intangible asset that they sold here, the ATA, because the software is an intangible asset. Just note these differences. Okay, yeah, we've looked at this one. Scenario 5, Amagent's Trucking. They purchase fuel worth 36,000 to fill up their truck for the trip to Cape Town. So again, is this an output? Is this an input? Remember, when you purchase, you can claim back. You spent money. So now you need to get back something because you've already spent. You've paid like 36,000. So is this an input or an output? So it's an input. You're going to claim this one back. But now, again, note the difference here. Because it's fuel. You see the question says they fill up fuel. It's fuel. It's zero rated. So you're not really gonna get any input here. Your VAT is charged at 0%. So there isn't any input that you're going to claim because it's fuel. So what you need to do, you need to go on your notes and you read all the items that are zero rated. Mostly, okay, like in this case, it was fuel. There's a whole lot of other things that are exempt. They're basically trying to make the price cheaper because fuel, we need it. It's like the necessity. Even brown bread, there's no VAT. That is why most of the time you find your brown bread cheaper than your white bread because white bread has VAT while brown bread doesn't have because they take it as your basic food stuff and then you need. And then rice as well, it doesn't have, VAT. There's other items that are zero rated. Just read up on them. And one thing that you need to know, if an item is zero rated, it's important that you show that it's zero rated and then you put that 0% and then you're going to get marks for that. Because if you're going to say it's zero rated and then you're not going to even show the 0%, you're really going to lose easy marks. So it's important that you add that zero there and then you're going to get easy marks that are lying there. Oops. Okay, that was the end. Yeah, that was the end. I think I'm going to make another video where we're looking at VAT, where you have an amount, basically where you calculate VAT, where you have an amount excluding VAT, how you work that out. But it's pretty straightforward. This is the more complex calculation. So if, for instance, they tell you that, okay, 80,000 is excluding VAT, you just take 80,000, you times it by 15%, and then it's going to give you the VAT amount. But in this case, because it was including VAT, that's why the calculation was a little bit complicated. But if they tell you that, okay, 80,000 is excluding VAT, you just take 80,000 as it is, and then you just times it by 15%, depending on what the percentage is, because it can be 0, it can be 15%. So you just take it and then you multiply it as it is. Let's just recap. Yeah, I think we've covered everything. If you guys have any issues or any questions on this one, just let me know. Thank you so much.